Hello, dear traders. Gabriel here again. Welcome to my channel, Forex.Real.Trader coaching sessions. Today, we will start the creation and the criteria to build a sound Forex trading plan. And the first strategy sketch, right, that I would like to share with you in order to give you the main highlights about this very important aspect about trading. This is just to close our module 4 and in preparation for our module 5 about real trading strategies. In module 5, I will be showing you different strategies that we can approach with real trades in order to have the real impact when we make good decisions when we are trading. So the first thing here today is basically to define your trading goals, right? When you start creating a trading plan, is the same as a roadmap for your business, right? Trading is not just going like a crazy person, clicking here, clicking there, and in a random way, and collecting losses. And in the end, frustration. No, we need to be very systematic, very disciplined, very organized, but with something simple, right? And that simple thing is to have your trading plan. In this moment, let's talk about this part, defining your trading goals and risk tolerance. What is that? Basically, it relates to what I have mentioned in previous videos. It's about setting clear objectives, right? If your trading is daily, weekly, right? In your profits, the target that you are aiming at is a daily profit, is a weekly, monthly. So, what is the style in the profit gathering? And also determine how much risk per trade you are capable of accepting. Remember that in previous videos, we talk about the 1%, 2% in my capital, right? So remember that you have to calculate that per trade. All right. So that is the first thing. The second thing here is to choose a trading style. It was something that we also mentioned in previous videos as well, and is to decide if you'll be a scalper, a day trader, swing trader, or a position trader based on your time, commitment, and personality. Another aspect that we have to talk about is about the material, right? The material and the markets that you're going to focus on. Okay. So, what are the, in this case, material is the type of Forex pairs that you're going to use. If you're going to focus on the majors, minors, or exotics. Again, in previous videos, we mentioned about how important is to make that decision. And for beginner traders, the best way is to start with the majors. That is to say, those pairs that are basically with high volatility, with high liquidity, such as euro dollar, pound, American dollar and yen, etc. Right. Another thing is basically to develop a risk management strategy. Okay, super duper important. As we showed in previous videos, things related to always defining stop losses, take profits, and the proper position sizing to protect your capital. That's part of a sound trading strategy, right? And a trading plan. Another aspect that you have to bear in mind has to do with establishing clear entry and exit rules. Define the conditions under which you will enter and exit trades based on technical indicators, price action, fundamentals, and all the sorts of sources that we can use in order to establish that proper entry and exit in every trade. Another key aspect here has to do with back testing your strategy. Use historical data to test its effectiveness before trading live. That is to say, the advice is to start trading with demo accounts, but treating the demo accounts as real money. Most people treat them as fake money. Yes, it's fake money, of course, but in the psychology, you will treat in the account as fake as well when you are trading in a real account. So take the demo accounts with seriousness, because it's the way that you are training, is the way that you are practicing, and in this case, the way you are back testing your strategy and your trading plan. Another important aspect here is to create a trading routine, right? Set those specific hour markets that you want to analyze, right? The trade execution, the review, no matter what. If it was a good one, right, with a profit, or if it was a trading which you took a loss, right, it doesn't matter. You need to be very organized with that routine as well. Also, choose what market you want to trade. If you want to trade the New York market, if you want to trade the European market or the Asian market, right? So that's something that you have to be very clear about. Get to know each session as well. Right? Finally, let's talk about keeping a trading journal. In previous videos, I showed you a template, an Excel template that I designed. That is my trading journal. I invite you to use Excel as a very powerful tool, right? In order to track every move that you do in the month. I would like to show you now something about this part, because that's where we're going to talk about trading psychology. Look at this. This is trading, uh, my trading station. This is my MT5. This is my MT5 chart. So look at this. When we open the charts every day from Monday through Friday, and we observe the market, and we know that there is a lot of money there, and sometimes you feel the frustration that you really know that you really want to know how to dig the gold, right? That sometimes people taught you with the scammers, right? Scamming information. No, trading is so simple, it's very easy, right? No, you need a method, you need a strategy, you need discipline, education, you need tolerance for frustration too. And that is where the trading psychology is so important, right? The trading psychology is basically that capacity that you have to enter a trade and be patient to wait for it to develop. If it doesn't go on your way, you need to be very patient and very realistic about taking losses. The thing is that when you know what losses you are taking, when you know that your stop loss is according to your capital, when you know that the size of your trade is according to your capital, so that is something that's going to help you a lot, right? So the trading psychology is very important as well. Now let's talk about the strategies. Mm, Today is just a sketch, right? Just an introduction, just to let you see how a trading plan should look like. Okay. In coming videos, I will show you in detail the strategies, how to implement it, and what's next, etc. But as my motto was from the very beginning of the course, the objective is to go step by step, right? Little by little. So if you're watching this video and you didn't take a look at the others, so man, this is my invitation, right? So you can clarify several things about money management, about position sizing, about protecting your capital, about the different and very important um, candlestick formations, patterns, etc. Right? Because from now on, I will start assuming that you know all that information, okay, and developing the strategies little by little. All right. So let me show you something here. It's just a little sketch related to a strategy. Say, for example, this one here. This is the strategy here. All right. So the very first thing that you have to understand is that your strategy has to be realistic, right? You need to be very focused on real profits, on real goals. Okay. So the very first thing that we need to see here is that when we trade, when we trade, first we decide based on analysis, based on currency correlations, things that you know already, what pair I'm going to trade. Also, I will always use the same indicators, right? Okay, if in my trading plan and it's proven that my indicators with the moving averages with certain parameters work pretty well, always use the same, right? And if you use all the tools such as RSI, MACDs, or ADX, or okay, use them all the time. Okay, those are your primary indicators. When you're going to entry, remember that you need to take a thorough observation, not only of those semi-evident things that you might see. No, you need to be very rigorous in your analysis. For example, if you want to buy entry, your entry point is basically when there's a retracement or a key support level. How do you know that? By using Fibonacci, right? So with the Fibonacci retracements, and based on your strategy, you will set supports. All right. If my Fibonacci's are hit on the 50% or 68 or 32%, okay, that is my main or one of my triggers, right? In order to have a kind of confirmation. Apart from that, as we saw in previous videos, you're going to compile, for instance, all right, the use of or the observation of certain parameters, certain patterns. I don't know, I catch in here a bullish engulfing, or I can see here a hammer. So that is another indicator. Okay. Once you do that, okay, you proceed with the entry. Now, what is your exit strategy? For the exit strategy, you need to take into account your take profits, right? And of course, the stop loss. Remember that the ratios that we saw in previous videos? All right. So apply the ratios as well. In that order of ideas, you will be covering all the time before you enter a trade. It doesn't matter if the entry goes your way or goes against you. You are protected and you are following your trading plan. And in the end of the game, you will win money, right? It's that simple. Why? Because we're talking about discipline. So my dear traders, that's all for this video. It's a very short introduction about the different suggestions, right, that I can provide for the criterias related to a sound trading plan, and just a sketch, because that is just a sketch. The real trading strategy that I want to show you is more detailed. It's simple, right? But remember, it's a matter of discipline, right? So my dear traders, as usual, if you like my channel, if you find information here as important, interesting, that is helpful in your training and trading learning process, please subscribe, like, and share. Thank you very much. See you in the next.